Hey guys, and welcome back to an exclusive video on Tradingfyive. This is the channel that provides you with various informative content on the stock market as well as technical analysis. So our today's video is based on head and shoulder chart pattern, wherein we will systematically understand what is head and shoulder pattern, how do you use it, how do you trade on this pattern, where to take the trade, where to place stop loss, what will be the risk, and most importantly, when to trade and when not to trade in this pattern. And you know that I have told this many times on my channel, on my videos, that no chart pattern or candlestick pattern is accurate in every scenario. So it is very necessary to understand when the pattern will work, and in that way we will plan our trades. So you see, this video is going to be really vital, really important for the newcomers in the market. So make sure you're watching this video till the end. Do not skip this video. And one more thing, if you have not yet subscribed to this channel, make sure you do it so that you won't miss any upcoming videos or updates on the market. So let's start with head and shoulder pattern. So you see, the head and shoulder pattern is a reversal pattern that indicates reversal in the trend, that is change in the trend. And you know, this pattern is as powerful as the other power patterns and is widely used in technical analysis by the traders. And you see, by using this pattern, one can identify the reversal, that is, he can identify when an uptrend will be converted into downtrend. It will let us know when the bulls, the buyers, will lose the control over the market and the bear will drive the market in a downtrend. So as you see on your screen, that's a price which is running in uptrend. Yeah, that's what you see is an uptrend. And if in case you don't know what is uptrend, what is downtrend, so I have made a separate video on this on my channel. The link will be flashing above, or you can check the description. So as you see on your screen, this uptrend is then converted into downtrend. The bears get the control and we can identify this change in trend using the head and shoulder pattern. And you see, that's how a head and shoulder pattern usually looks like. That's the basic structure of head and shoulder pattern. And if you observe carefully, it resembles a human-like structure. Like it has the two shoulders, that is the left shoulder and the right shoulder. And a head just like a human has. And just at the shoulders, we got a neckline. So for now, just understand that neckline is a zone in this pattern that provides a support. Just understand this, that neckline equals support. And when this neckline breaks, that is when this support breaks, our pattern is confirmed. So that is a head and shoulder pattern which is formed on the screen. And you see it converts the uptrend with higher high, higher low pattern into a downtrend. And you see that's the level where the buyers are most active in the uptrend. You can see a great bullish spike in the price. That's where the buyers are applying the bullish pressure. That's where the bulls are applying the buying pressure. But according to this pattern, at the top of the trend, at the head of this pattern, the sellers get active and try to bring the market down at the level which is called as neckline. You see, first the buyers were active and then the sellers came into the picture. And at this neckline, the buyers try to regain back, try to push the trend upwards, but the seller outnumbers the buyer. So what does this mean is that selling pressure on the stock, selling pressure on the price is more than the buying pressure. So ultimately the stock shows a rally in downtrend. So that's how significant the head and shoulder pattern is. That's how it works in the market. And you see, this is the complete logical analysis of this pattern. And this is how money is made in the market, by logical using the analysis. And that's how we recommend you to trade, by using your proper analysis, proper logic, and not on the basis of tips or news. So moving forward, let us understand how we will trade on the head and shoulder pattern. You see, at this level, when the pattern is formed and the price breaks the trend, we will short, that is sell the stock and take entry into this trade. And we will place the stop loss just few points above the right shoulder. You see, that is the technique, that is the rule of trading on this pattern. And this trade is like minimum loss, minimum risk is involved, and the profit against the risk can be really fascinating. That's how you will identify the head and shoulder pattern. That's how you will trade on this pattern. And the most important thing in this video is that the head and shoulder pattern should be traded when it is formed after an uptrend. Uptrend is compulsory for head and shoulder pattern. If the head and shoulder pattern is formed in a sideways trend or rarely in a downtrend, then such pattern should be ignored. Don't take trade on this pattern forming in such a way, because it has no logical sense. Just remember that this pattern should be traded only in an uptrend. So I hope you understood this video on head and shoulder pattern. And thank you for watching it till the end. If you like the video, please hit the like button. Share this video as much as possible. And lastly, do not forget to subscribe this channel. I will see you in the next video.